everybody, welcome to the weekend edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Glad you were all able to make it in. Hope everybody's had a great weekend and had a great week of trading. For those of you that are brand new, we do the Daily Market Commentary on a daily basis, where we look at market opportunities and potential turning points. This being our weekend edition, we tend to look at a couple of bigger time frames and some bigger picture opportunities, as well as try to leave the lines on the charts, and so that we can see how trades develop over time, and some interesting ones to look at for today. So let's go ahead and dive into it. So we always want to start with our major markets, and we typically start with our major equities market. So let's go ahead and look at the S&P. So the S&P has continued its march higher. There's really, nothing more really to be said about that. Last week, for those of you that only join us on the weekend edition, we had talked about how we had a strong upward trend. That upward trend looked like it was going to continue. There was no reason to think that it wouldn't. And then Thursday, we had a little bit of a pullback, followed by a strong rally up on Friday. Looking at the hourly time period, we had talked about that there were some, there was going to be some people that were going to try to short this thing up here. We are not shorting all-time highs. It makes no sense to short an all-time high. The markets continued to rally up. We got a little reversal off of this area down here. This was not an area that we had identified as a potential trade. So I'll tell you, didn't catch any of this move. No big deal. That's all right. But it does set us up with a potential on a reversal. So if indeed price comes back down into this area, we now have this area here as a potential reversal point for the S&P. This would be an area where we have fair price. That fair price rate region was broken as price rallied up. There's probably still some pressure for buying, and a little bit of support will be found right in this area. So keep that area in mind. As far as a shorting opportunity, there's none. I'm just not interested in shorting this market where it is. Let's go look at the Nasdaq. Now the Nasdaq, let's talk about this for a minute. The blue lines for us have always represented breakout trades. So let's take a look at this breakout trade. Now this particular breakout trade was a breakout on the Nasdaq. And I'm going to go back to early in the week and really look at the whole week's Nasdaq movements from what we talked about in the daily market commentary. So here we had a long on the Nasdaq that triggered on Wednesday, and then price went up and it hit its target. Now we had the close of that long, as a chance to get long somewhere down in here. That trade worked out very, very well. And then we said, well, when it breaks out above this blue line, you've got another opportunity to get long. So it broke out above the blue line. Now, our rules on a breakout, this was a breakout trade as it broke out right here. And the rules on a breakout tell us that if we're going to have a breakout, our stop goes below the prior pivot low. So that would put a stop loss right under here. Now, price broke out and it didn't hold. And then it came back up, and then it didn't really hold. And then it came back up, and then it didn't really hold. And now the whole time, it's giving you this whole, for a couple of days, we were saying, well, it's not really hasn't moved yet, so don't expect a whole lot of movement on it. Until eventually it did, and we got a big pop on the breakout. So this was a breakout trade that didn't happen immediately, but it certainly did give us a very strong breakout once the breakout occurred. So many of you were able to hold on to that the whole way through, and if you did, then you were justly rewarded, and you probably, most of us are closing these things out on the weekends. Moved up very nicely, closing really close to an all-time high in the Nasdaq. Looking at this thing on, say, a weekly time period, the thing I do like about this move that we had, and let me just actually switch this to the NDX just so that we can see a little bit more clearly. The thing I like about this weekly is that if we can continue to go higher, we will have set a new weekly fair price area. And those weekly fair price areas are where we can continue to move our stop losses up on our long-term investment portfolio. So having that long-term investment portfolio and moving that stop loss up underneath there's no reason not to move it up, kind of going forward from this area. Real quick, I want to take a look at the small cap index. Now, the thing I like to point out about the small cap index is notice that in the S&P and in the Nasdaq, we're back to all-time highs. Not the case in the small cap index. So the Russell 2000, not at that same level, didn't get back up to that all-time high. And so, that's a little bit of cause for concern, showing us that the Russell does indeed have a fair amount of weakness in it. Just real quick, looking at the Dow Jones, our other major market. The Dow Jones closed at the all-time high and has kind of continued to rally higher. So what this shows me is that there's a little bit more fear, if you will, of going into the small cap securities. The small cap stocks don't have that same level of follow through that the bigger cap companies do, and that should stay on your radar. So moving on, let's go take a look at crude oil. So crude oil, we had a very small time frame turning point trade set up right here. Price almost, this is, I like to call, I don't like to call this, it just is. You get nicked by a tick, meaning it almost gets you in and then it failed. And the level itself didn't fail. We just didn't get fulfilled on the particular position. So what I'm going to do is I'm going to remove this level. And the reason I'm going to remove it is because of all this basing right in front of it. It weakens the probability that that area is going to work as well. It still might work, but I'm not willing to risk hard-earned dollars on it. I just don't see that being a great opportunity. I'm going to pretty much not look at anything right now in oil until I get some definitive movement one way or the other. Gold. Now, for those of you that are doing the candle-to-candle style of trading in gold, we talked about candle-to-candle style of trading. We've continued to have higher highs in gold, if you notice, and higher swing lows. So if you are doing the candle-to-candle style of trading, which we've talked about every day on the daily market commentary, we talked about entrance right here, stop goes below here. When we got just above this high, you're in, stop gets moved up. The next day, the stop. So right now, if you're still in this candle-to-candle trade, your stop should be moved up to just below Friday's high, which would be right here. And if you're still in this thing, if we gap down over the weekend, you're going to be out of it, and if we continue to go higher, then you've got your stop loss locked in and you've locked in some profit. So this is an example of, on the small time frame, we couldn't find a great entry, but candle-to-candle trading, this gold futures has worked out very, very well. I do believe that it's running out of steam. I think that we're going to run out of some steam up in here. Originally, I had a breakout long above 1274 and a target of 1274 for down here. I think we're starting to lose that momentum. These high upper wicks show me that momentum is being lost. All right, let's go take a look at the bonds, the euro, the Aussie, the Canadian. So bond market, once again, and I said this earlier last week, I don't know if we may not get anything else to trade in bonds the rest of the year. There's just nothing in between this 23 area and this 25, 145 that I am in love with enough to risk my money right now. I'd have to, we'd have to put in a good area. So for right now, I'm leaving this one be. In the Aussie, so the Aussie, we got a price came back down into this region. Not a huge fan of this region for a couple of purposes. The biggest one being I don't really like the time of day that it was created. You could go a bit deeper into here. This one's okay, a bit better. I actually, when I go to a bigger picture time period and look at it on the daily time period, we've actually put in a higher swing high. So we've got a higher swing high, but I still have lower swing lows. So technically, this is still a downward trend. We've broken the lower highs by putting in a higher high, but technically this is still a downward trend because I don't have a higher swing low. It's still a downward trend until I get a higher swing low. So that being said, you might actually be better off trying to get a short off of one of these areas up in here, simply because the daily chart is still in a downward environment. You can go to the 15-minute, and when you go to a 15-minute, I would be okay if you really wanted to be fairly risk-averse and just use this area here for a short reversal right there. Looking at the euro, so the euro trade, we talked about on our on an update that we had put out on on my Twitter feed. We talked about how you should be doing the happy dance if the euro trade worked out, and it did indeed, and still continuing to fall from our identified area. So good one there. Maybe take your stop, move it down to lock in some profits. the Canadian dollar. We're still waiting on our breakout below this 77.48 on the Canadian dollar. I think there's going to be some reversal potential up in here, but we're nowhere near there. I'm not going to mark that one. I'm not even going to mark that one as of yet. Last and certainly not least would be our Great British Pound and our Japanese yen and the nat gas level. So our nat gas level, this one, didn't work for us. We came right through that nat gas level and it failed. So we got a couple of winners. You're going to take losers, and I'd love to give you a great description as to why it failed. It just did, and the level just broke right through, and that one just didn't work out for us. So as far as going forward, nothing I really have off the top of my head, and that one really fell through because we were in a bigger picture daily downward trend. I thought this might help us to hold that trend. Indeed, it still might. We still may bounce off of this little pivot, but our hourly was not able to hold. On the Great British Pound, I think this is actually could be a good opportunity for candle-to-candle trading on a short, as we are coming into a potential reversal point in the British Pound to continue forward, but it's not there yet. Japanese yen, we still have our 15-minute area of buying potential right there. That 15-minute support does exist in there. It's just this little tiny bit of consolidation and fair price before a strong rally up, and that rally up then included a gap the next time price came down into it. So this area does indeed still exist. So with that being said, I'm gonna log off for this week. For this weekend edition of our daily market commentary. If there's anything you can do or questions that you may have, feel free to reach out. Leave some comments in the section below. Thank you so much for joining us, and I look forward to seeing you very, very soon. Until we talk again, fiercely protect your capital. Talk to you soon. See you.